What are the liability exposures you actually need to pay attention to if you're running a small business in 2026? 5 years ago, most business owners worried about the basics. Someone trips in your store, an employee gets hurt on the job, your delivery driver causes an accident. Those risks still exist, but the liability landscape has shifted enough that if you're only thinking about slip and falls and auto accidents, you're missing exposures that have become more common and more expensive than they used to be. And the changes really aren't dramatic. You're not dealing with entirely new categories of risk. What has changed is how often certain situations occur, how quickly they escalate once they start, and really what the financial consequences look like once they're up in motion. In almost every small business we review, they think they're covered for at least one of these exposures. In most cases, they're wrong. What if firing one underperforming employee could cost you $50,000 in legal fees, even if you did everything right? Employment practices are a good place to start. You've always hired people, managed performance, and terminated employees when things didn't work out. That's not new. What is new is how easy it has become for a routine employment decision to turn into a legal event you're required to respond to. Let's say you own a small marketing firm with 12 employees. You hire someone into a project management role. 3 months in, it's clear they're not meeting expectations. Deadlines are missed, client communication is inconsistent. You document the issues. You have performance conversations. When things don't improve, you terminate their employment. You follow your process. You think you handled it correctly. 2 weeks later, you receive a demand letter from an attorney alleging wrongful termination, discrimination, retaliation, and a hostile work environment. None of those claims reflect what actually happened, but you're now responding to formal legal allegations. Even if every claim is baseless, you're still paying to defend yourself. If you don't have employment practices liability coverage, those defense costs come directly out of your business. What's changed isn't the law. Wrongful termination claims have existed for decades. What's changed is the threshold. It's easier to file. It's easier to find attorneys willing to pursue cases, and more claims move forward even when the underlying facts are weak. That doesn't mean every termination leads to a lawsuit, but it does mean the odds are higher than they were 5 or 10 years ago. The exposure doesn't stop at termination. Hiring decisions, promotion decisions, compensation disputes, performance reviews, and workplace conduct complaints can all trigger employment practices claims. If you've hired, managed, or terminated employees in the last few years, this exposure already exists for you. Most general liability policies do not cover employment practices claims. Treating employees fairly helps, but it doesn't eliminate claims. Documentation helps, but it doesn't eliminate defense costs. Employment practices liability is separate coverage, and many businesses don't realize they don't have it until they need it. In a world where one unhappy client can sue over unmet expectations, is your expertise insured? Professional liability used to apply mainly to doctors, lawyers, and accountants. In 2026, it applies to almost any business where the outcome depends on your judgment, advice, or expertise. You run a digital marketing agency. A client hires you to manage their advertising campaigns. You set expectations. You manage their budget. 3 months in, they're unhappy with the results. They've spent $30,000 and feel they didn't get the return they expected. They terminate the contract and then file a claim alleging you misrepresented your capabilities or failed to deliver what was promised. And maybe you did guarantee results, maybe you didn't. But now you're defending a claim that your professional services caused financial harm. This isn't about wrongdoing, it's about disagreement. If you have errors and omissions coverage, your policy responds. If you don't, you're paying for legal defense out of pocket, regardless of whether the claim has merit. This kind of dispute has become more common as more businesses operate in service industries where outcomes are subjective. Designers, consultants, developers, marketers, advisors all face this exposure. Contracts can help limit liability. They don't prevent claims and they don't prevent defense costs. General liability does not cover professional liability. If your revenue depends on your expertise, this exposure exists whether you call yourself a professional or not. If you operate a business in 2026, you're collecting some form of customer data, email addresses at a minimum, often payment information. That data lives digitally, either on your systems or through third-party platforms you rely on. You run an e-commerce business. An employee clicks on a phishing email that looks legitimate. Malware installs quietly. Customer data is accessed without anyone realizing it. You don't discover the breach until customers report fraudulent charges. Now you're on the clock. Notification deadlines are measured in days, not months. You hire forensic investigators, legal counsel, notification vendors. You may need to provide credit monitoring. Regulatory penalties may apply. Most businesses can survive a slow lawsuit. They struggle when six-figure costs hit all at once. Cyber liability isn't about whether you're targeted. It's about how quickly costs accumulate once something does happen. General liability does not cover data breaches. Cyber liability is separate coverage, and many businesses don't have it because they assume they're too small or too careful. Neither assumption prevents a breach. The last area worth attention is product liability. Not because the risk is new, but because enforcement and scale have changed. If you manufacture, import, or sell physical products, you're responsible for what happens when something goes wrong. You sell consumer products sourced overseas. Months or years later, a defect emerges. A recall is issued. Now you're managing customer notifications, returns, regulatory reporting, and potential lawsuits. Even if no one is seriously injured, the operational and financial burden escalates quickly. General liability does include product liability, but limits matter. If you're importing products, selling at scale, or branding products under your own name, the exposure can exceed what a standard policy was designed to handle. None of these exposures are rare or extreme. They're normal business activities that can create legal and financial consequences, and most of them sit outside standard general liability coverage. If you're trying to figure out whether your liability coverage makes sense, start by identifying which exposures you actually create. Employees create employment practices exposure. Customer data creates cyber exposure. Professional judgment creates errors and omissions exposure. Products create product liability exposure. The goal isn't to insure against everything. The goal is to make sure your coverage aligns with the risks you're actually creating through the way your business operates in 2026. If this helped you understand where real liability risk actually lives for small businesses today, click like or subscribe so you see future videos as they come out.